Hey guys, RC Peck here with Fearless Wealth. And I want to talk about the word secret first before I talk about what secret I'm going to talk about. But I want to look up the definition. I looked up the definition because I want to be clear about what I mean when I say the word secret, because I want to talk about something and give you a real world example of how this is hurting you. So I'm not going to do a presentation. I just want to show you this one slide, meaning I'm not going to do a deck. Five secrets to an easy and fun way to finally get the growth and income you want. So there's five secrets, and I'm going to talk about one of them, and I'm going to show you some price charts of something that just happened, and I guarantee it just happened to you too. So the definition: something that is meant to be kept unknown or unseen by others. So if there's an industry that wants to keep something unknown or unseen by others, it is a secret. And there are a lot of secrets in the world of growing money. And the one I want to talk about is newsletter picks are stunting your portfolio's growth. Now, look, I'm going to talk about whether it's a newsletter that you pay for or one you get for free. And I don't even know if I pay for this one, but this one's from Malden Economics. It's called Reality Check. And I just I'm going to read it. I'm not going to read all of it, but I'm going to read most of it because I want to talk to you about what's actually going on in your brain and how this is such an easy way to stunt the growth of your portfolio. And when I mean this, meaning reading some research, whether it's paid for or free, but you did opt into it, meaning whether it's a paid subscription or not. So I got this one on July 28th, so very recently. Okay, so here we go. Automating the fight against COVID 19. All right. Who doesn't want to automate the fight against COVID 19? So it's current. People are thinking about COVID 19. They're being taught that and told that other countries that are doing better and fighting it are a better place to invest, which is not true. Here we go. For workers returning to conference rooms, cubicles, and community kitchens, post COVID can seem too close for comfort. For employers who want to put people back to work safely, spacing out desks and installing sanitizing stations may not be enough, right? So they're scaring you right now. And for one Ireland based company that outfits social and commercial spaces with smart technologies, it opens up a big opportunity. So that's the hook right there, right? That's the hook saying, wait, what's that Ireland company? Like you kind of lean in and go, what is it? Workplaces are about to get smarter. Office building, malls, factories are full of machines whose surfaces can attract virus and germs. This again, they're scaring you. Right now, we're talking about elevators, escalators, security cameras, HVAC systems, and many other dumb devices that plod along. Again, scaring you. Smart buildings are different. They get extra Mensa points. That's nice framing because of all those seemingly independent systems are not linked together. Some buildings are about to get a lot smarter, right? So that's then pulling you and going, oh, maybe there's a way to make money on this. Smart buildings of tomorrow, like today, will be monitored and controlled on site. That is, they will be overseen by a system that uses artificial intelligence. There's that catchphrase, artificial intelligence. Integrating AI into how buildings are managed has opened a new era of possibility. That's another hook, guys. And all be made possible by the use of sensors. One of our favorite sensor companies is Johnson Controls International PLC. So they give you what they're talking about. They're saying to you, JCI, that's the ticker symbol, this is what we think is going to be a great answer to this COVID problem. Now they're training you, and you've been trained to use these words and translate these words into feelings in your account getting bigger and better sleep because you don't actually know if it's going to help you or not. And I'm going to show you in a minute how you can literally know in seconds. Okay, dollars and sensors. Smart buildings are already using sensors to lower energy costs. Okay, got it. But AI, and guys, I'm kind of skimming now to get through this, but AI is taking building efficiency beyond just dollars and cents. It can also analyze how we move around a building, devise improved use patterns that make sense in a COVID-19 world, right? So now they're talking about that sensors are a great way to make a building better. And the presupposition is you want to get a company that is making these sensors. Sensors can monitor whether customers and employees are wearing masks, but managing existing installations are just the tip of the iceberg. Okay. Automation Nation, right? So as we gather and analyze more and more data, we'll develop efficient use-based designs. So it goes on, and now it starts to give data here. Like by 2024, building automation system market will have a compounded annual growth of 10%. So they're giving stats like, hey, this is an area that's going to grow. We're all talking about, we're all being fed all these areas that aren't going to grow. Building automation systems is a market that's going to have a compounded annual growth rate of 10% a year, right? From 2019, it's going to grow from 75 billion to 121 billion. So they're kind of setting up like, hey, look, and Johnson Controls will be part of and profit from that growth. Okay, how JCI outsmarts dumb buildings. So it goes on and talks about, now it's building a case of buying Johnson Controls, right? And it talks about their operating income. It tells how they're doing, right? It also kind of exposes like their operating income fell by 30%, again, mostly due to one-time events. So it's almost like you're on a call talking about this company and listening to this company and wanting to know more about it. So we're taught that all this information matters, right? Because we're having to, in our brains, put pictures together and go, okay, this is going to help my portfolio. This is going to help my retirement. This is going to help my income. This is going to help my growth. And so what happens is people buy, right? People buy or subscribe to these newsletters and they're being given this information. And newsletters absolutely stunt the growth of portfolios. So it then ends with the stock currently trades at a forward price to earnings ratio of around 19. That tells us there isn't much of a premium for JCI when compared to other industries. Like, oh, wait, it's not being sold at a premium. Let's get in. Maybe it's a turnaround, right? That makes JCI a solid triple play on the huge growth we see ahead in the automation, AI, and Internet of Things spaces. So, wow, a triple play. Who doesn't want that? So here's an example of a newsletter, paid or unpaid, where people subscribe to it. Now, I picked John Malden because he's actually one of the better guys out there. He does have a bunch of newsletters. I've actually been reading his newsletters for probably 2 decades. He's more of an economist, but he's been pushed into selling newsletters. Nothing wrong with that, guys. I'm here to just show you how newsletters can stunt the growth of your portfolio. So what happens is you're left with this information thinking Johnson Controls is great. And so what someone would probably do is they would go out and do research on it, but they would look for more words and letters and paragraphs and pages, right? They do more research. What I want to do is just show you a price chart here. This is Johnson Controls right here, 2.7% yield. So it's got a dividend. And this is a 3.5-year price chart of Johnson Controls. And to me, it looks horrible. I would never buy something that looks like this. I train people to avoid price charts that look like this. One of the things I do is I train people so they can almost immediately know if something is a go, no go, or get the hell out of here. Now, of course, I have not put everything on this price chart that I train people to do, but it's actually, there's not that much missing. But what happens is if people don't know and if they're not trained how to look at what they're buying, they end up buying a great story, but a crappy investment that stunts the growth of their performance. And it doesn't take too many stunting growth symbols in a portfolio to create a lot of anxiety, worry, stress, overwhelm, angst, and underperformance and stuntness in their portfolio. And this is just a really good example. So let me go on. If one's going to buy Johnson Controls, this is part of the industrial sector, right? And so one would want to then say, well, is it even beating the industrial sector? And on the screen here, you see 3 lines. The blue line is the S&P 500, okay, with dividends reinvested. The green line is the industrials sector, XLI. And then the red line is Johnson Controls. So guys, if you're going to put your money in an individual stock, it better damn well be outperforming the sector it's part of. Otherwise, what the heck are you doing? You are increasing price volatility in your life in a smaller entity, right? Smaller than the sector. If it can't even beat the sector, what are you doing? And then the sector can't even beat the index. So it's got 2 whammies against it. And this is just from the beginning of the year. As I scroll back, just notice the red line, which is Johnson Controls. It never gets, now I know it's above over here, but you need to look here at the end where the story ends. And as I scroll back in time, you see that the red line never really gets above the blue line. And that at a certain point, it can't even stay above the green line. So what ends up happening is people read stories from newsletters and they buy the story, not understanding that story is going to hurt the growth of their money. They're buying a bad investment even though they love the story. And again, the red line is Johnson Controls, the S&P 500 is the blue line, and the industrial sector is the green line. And so what happens is people, because they've never been trained on how to filter information or look at information or go, is this a go or a no go, regardless of whether you like the person or not, they end up buying investments that stunt the growth of their performance. And it's super easy to even know if you should be in the industrial sector or what is the best stocks in the industrial sector. These are easy things to do and they are even fun. And what I most wanted to do was just point out to you and show you how, first of all, things can be easy and fun and you can grow and get the growth income you want. But it's just an example of something that happened in the last 10 days. And I guarantee you, every one of you has gotten dozens or hundreds of emails, paid, maybe not hundreds, uh, tens of emails over the last 10 days talking about an amazing fill in the blank that's going to help you. And so this is just one example of how when you get trained and you really reveal those secrets, right? You reveal the things that people don't want you to see, right? A secret is something that is meant to be kept unknown or unseen. And these newsletters want to keep this stuff unknown, right? And unseen by you. And it's absolutely hurting your growth. Now, one of the things I do is I train my clients to first be the market, because over any 5-year trending period and over any 5-year rolling period, um, most people can't even beat the S&P 500. And people balk and say, I don't want to buy the average because then I'll just average returns. But the fact is, no one beats the average over any 5-year rolling period. And it's mostly because they've been trained to underperform. That's a trained behavior. You weren't born with that. But the thing I just want to point out here is one of the things that I train my clients to do is to pick an index. And here's two indexes. One is the SPY and one is the Qs. And if you learn how to know when to be in or out, you get an overall performance. This is over the last 2 decades. S&P up 500%, 512% right down here. And the Qs with an in and out over 979%. Now, this is important because if you look at, if you just bought and held the S&P, you would have done only 317% right there. I don't know if you can see that okay. And if you would have bought and held the Qs over the same 20-year period, you would have grown your money 263%. So getting back to the S&P, most people can't even get what the S&P is doing, right? And when I say most, I mean almost all. But one of the strategies I introduce and offer to my training clients is to say, look, let's get you what no one can beat, but also let's find out the periods of time where you don't want to be in the market without trading or timing or having to tune in. And so it really struck me when I read this newsletter that I got on July 28th that, again, people are getting scared into doing the wrong things and it ends up stunting the growth. And whether it's about Johnson Controls and COVID, or the US dollar losing reserve status, or the market being as overpriced as it's ever been since 1929, it's all garbage and is all creating a level of anxiety, angst, and fear and worry inside you. But it doesn't have to be that way. So, guys, if you are interested and curious in having it be a better way, having growing your money be easy and fun, you can just check out fearlesswealth.com/2K for 10K. And I have a program that I've been leading for over 2 decades that literally can retrain someone in days and not months or years, quarters, or lifetimes, but literally in days to get them the experience they want. Thanks, guys. I appreciate this. Let me know if you have questions or concerns or issues or judgments about that. You can leave that in the comments. I think it's important to have some kind of some education, some real world education. I know no one wants to be educated. People want to learn. It's the same thing. People don't want to be sold to, they want to buy. And there are people out there looking for a better way to invest. They know something's wrong. They just don't know how to. They want better results. They just don't know how. And in this specific example, they're stuck in the newsletter world, which I call the pick of the month newsletter world, because that's what it's like. Pick of the month, pick of the day, pick of the week, pick of the hour. And it just inundates and really stunts people's growth. So leave the comments below and let me know questions, concerns, even judgments. I get annoyed. These are my people. Like, my people are men and women over the age of 45 who want to figure this out. They did a lot of things the right way. And again, John Malden is nowhere near the worst of the people out there. He seems like a super awesome guy. But the point is, people are absolutely getting hijacked by the newsletters they subscribe to, whether they're paid or free. So thanks again, guys. My name is RC Peck, and this is Fearless Wealth. And this is just another step in really helping you take back control of your money and your life. All right, guys. Thanks.